What's up, everybody? It's Mike, and today I want to walk you through how I go about placing stop losses. This question actually came in from Manish on Instagram, and he was asking, well, where exactly do you place your stop loss? How do you know if you're setting it well? The way that I like to do it is I like to have multiple layers of confluence where you should be able to drive a truck over this where you place your stop loss. So I like to layer a lot of things on it, and I'll walk you through a recent trade. So here's a trade that I recently took in Seattle Genetics. The ticker symbol is SGEN. And what I did was I saw that it was setting up in this sideways consolidation. You might consider it a flat base. You might consider it a double bottom. For me, I'm looking at this as a flat base. One of the things that I saw too while this was setting up was that it had this little bit of a descending trend line within that base. Now, for me, I always like to get in as close to the support level as I can. And one of the ways to do that is to, when you're seeing these sideways consolidations, is to see if there's any kind of a tighter trend line or tighter consolidation. This happens to have it. Like, you could see how it went from this wide and loose base structure, relatively wide and loose, and got progressively tighter as the trade progressed. So I'm looking to get in right there, and that's actually where I got in. So I take that tool over there. It's like, all right, I'm getting in right on that breakout, and I want to exit if we fall back below this level right here, right at 147.20. And the reason why is because, well, a few things. One, that lines up, that's price structure on the daily chart. It also happens to line up with price structure on the weekly chart. It also, on this breakout over here, if price were to fall, it would need to fall below the 5 EMA, that little gray line. It would need to fall below the 10 EMA, that green line, below the 21 EMA, that purple, and below the 50 SMA. That's that red line there. And the reason why that one is the most important one, or the most important one. And the reason why it's the most important one is because that's the one that your major hedge funds, mutual funds, pension funds of the world are looking at, primarily because they can't move in and out of trades like we can, right? Like the individual investors, if you're moving around, even if you're moving around 100,000 or $1 million in your account, you're likely not moving the stock. Well, we're playing in a field where we're up against like billion-dollar hedge funds, and they can't move around. When you're moving around that kind of money, you cannot go in and out of a trade. So they're looking at that longer-term time frame. When we have those moving averages all stacked up, so we've got 4 of them right there. That is one thing that's saying that, wow, you could drive a truck over this support level. But that's not the only thing. Another thing that I'm looking at is the Fibonacci retracement levels. So I take that and I'm looking at the swing high to the swing low of the pattern. And right over here, where I'm looking to place my stop loss, it's even has protection from that Fibonacci level. If we zoom in a little bit, that 0.236 Fibonacci retracement level. So that, how many layers of confluence do we have, right? We've got 4 moving averages. We have a Fibonacci retracement level close by. We've got daily support, and we've got weekly support as well. Now, that is a lot to support price at that level. So if price broke out like it did, and then it fell back in, then that's a clear sign that this pattern is flawed. And that's what I want to look for. I want to look at it, well, if price does come back in and it shakes me out, I want the pattern to be flawed. And those are the kinds of trades that I'm gravitating towards. It's one element that I want to see in a trade. It's not everything, but it's a very important element. Now, if you'd like to show up and see some of the other things that I look for in trades, I run a deep dive every single Saturday. Go to marawealth.com/events, or you could, depending on where you're watching this, you could click the link in my bio. I always put the most recent event in there. Come to that event and we walk through every single trade that we're going to plan to take for the week and talk about it as a group. So come to the event and you'll get a lot of value from it. That's basically it for this idea. I want to say thank you so much for watching. I truly appreciate it. And let me know what you thought. Comment down below. Click the like button. That'll help us out a lot. And I'll see you in the next video. Take care. Much love. Peace out.